this week, the Sensex ends the week below 16,000. We'll help you pick the stocks and the sectors with the highest potential in a market like this. India's fourth quarter GDP came in at 5.3, the sharpest decline in 9 years. We'll tell you what this means for your stock investment. And Gaurang Shah picks Godrej Consumer Products and Shriram Transport Finance as smart investment options. We'll find out why. Welcome to All About Stocks. You're watching ET Now. This is a good time for us to sit down together and re-strategize our equity investments and our portfolios to make sure we're prepared for what comes next. India's economy has witnessed its 8th successive quarterly decline. It grew at its slowest pace in 9 years. The market, of course, reacted accordingly. Remember, you can reach us. There's an email ID at the bottom of your screen where you can write to us and ask us questions you might have about your equity portfolio. Now, before we talk about how all of this is going to affect your stocks, my colleague Avan is here with the latest on the markets. Avan.
A fairly disappointing week for the markets, where the benchmark indices shaved off close to 1.5%, as did the broader markets, given the low GDP numbers as well as the free fall of the rupee against the greenback. It was the rate sensitive such as the auto as well as the banking sector which lost out. OMCs were also in focus after that unprecedented hike in petrol prices. You had a lot of political parties which created a ruckus, post which the petrol prices are likely to be cut by close to 1.25 to 2 rupees per litre. Big result reactions. You had Tata Motors, which was a big disappointment, after which a slew of brokerages cut the earnings estimates. ONGC came out with results which were in line with estimates on account of rupee depreciation as well as royalty arrears which cushioned the profit. M&M reported a good set of numbers, and for the month, Unilever was the only stock that gained in the Sensex on a 1-month basis.
Right, Avan, and we all saw the headlines. We saw that low shocker GDP number. Tell us what exactly happened on the floor, what went into this number, and what the reactions were from market watchers.
We had the GDP numbers for the fourth quarter which were declared, and they came in as a big shocker. It slipped to 5.3% versus estimates of 6.1%. That's the lowest in 9 years due to a poor performance in the manufacturing as well as the farm sectors. For the entire year, the GDP was at 6.5% versus the estimate of 6.7%. The manufacturing sector, that contracted 0.3% from 7.3% last year. And you also had the farm output, which exhibited a similar trend. So it expanded by just 1.7% compared to 7.5%. You had most of the brokerages now which have slashed the GDP forecast from earlier. In fact, you have Morgan Stanley, which has cut the forecast growth to as low as 5.7%. JP Morgan has cut it to 6.3% versus 7.1% earlier. And most of them are saying this time around that the downside risks to growth are on a rise.
Thank you, Avan. Joining us now is Gaurang Shah, the Assistant Vice President at Geojit BNP Paribas, to help us understand all of that bad news Avan just gave us and try and help us figure out what we should be doing with our equity investments right now. Mr. Shah, it's always a pleasure to have you on the show. The rupee is currently still at its weakest, the Sensex ending below 16,000. Even Montes Singh Ahluwalia is now using terms like slowdown. There's no debate about the fact that our economy is slowing down. What I want to understand from you is, do you believe we'll see a further cut on Monday morning, or has all of that bad news already been factored in?
No, I don't think the bad news are factored in, and the bad news are still flowing here, whether it is domestic front in terms of GDP number, IIP number, or other policy issues which the government is facing, or from the overseas market, whether it is US, Europe, or other part of the globe. Whether we'll see further downside, well, I believe that there could be another 5 to 10%, depending upon how damaging the news flow is, and of course, where finally does the rupee end against the dollar. But in terms of foreign brokerage houses and the outlook on India, given the kind of dismal performance on IIP and GDP, and of course the Q4 numbers, I would not be surprised if you have, scaling down of targets both on Sensex and Nifty, and even on the GDP by some of the brokerage houses. And already we have seen a couple of them downgrading the GDP growth. So that's going to be a bit of concern, and one cannot rule out another 5 to 10% cut on the Sensex and Nifty. And of course, sector stock specific, it might be a little bit more.
What is your advice for a long-term retail investor who's watching all of this bad news? Would you recommend that he go in and pick up 1 or 2 interesting stocks, or should he be just waiting to see how things play out?
As I mentioned earlier, since we expect a cut of about 5 to 10%, I think you can phase out your investments and do some cherry picking, and sectorially you can do some investment in stock specific ideas, starting with large cap, then spill over to the mid cap. Again, stock specific over there because you need to put your investment under the microscope when it comes to mid cap stock ideas. So depending upon the risk appetite, and of course the time horizon should be about 12 to 16 months plus, because in the next 3 to 6 months, don't expect any miracles to happen.
All right, no miracles in the next 3 to 6 months. I want to ask you about the banking sector in particular. It was down on Friday. SBI down 1.1%. Now, a lot of our viewers are holders of banking stocks. Obviously, it's a mirror of the economy right now, but what's your call on banking stocks when you look at that sector? Is there anything there that catches your eye?
We feel that, yes, like you rightly mentioned, it's the mirror of the economy, and of course it is the financial backbone of the economy. So from that perspective, we have stock-specific ideas as a disclosure. We have a buy coverage on Axis Bank, ICICI Bank, IndusInd Bank, Yes Bank. And if I have to be selective in the PSU lot, then two names immediately come to my mind. That is about Bank of India and Bank of Baroda.
We saw aviation stocks come up on Friday because there was a cut on jet fuel prices. Kingfisher was up nearly 4%. Now, a lot of our viewers have been writing into us saying that they're holding Kingfisher stock, waiting for an opportunity to get out of it. Is this that opportunity?
Any recovery, I believe that is the opportunity to exit any of the aviation stock, whether it is Kingfisher, whether it is Jet, or whether it is SpiceJet. Let us understand one thing. The ATF price cut does marginally reduce the expenses for the aviation sector. But the other problems that they are facing is the reported losses for just not 1 or 2 quarters, but quarter on quarter. So I really don't think that you are going to see any respite, at least in the near term or even from a longest time horizon, unless there is some, great change in the government policy for the aviation sector, and that looks very difficult as of now.
All right. For those of you who've been waiting for an opportunity to book out of Kingfisher Airlines, this might be that opportunity you were looking for. It's time now to move on to our portfolio segment, where every week we pick the portfolio of one lucky viewer and we take a look at all of his stock investments together to find out if he's on track. This week we're looking at Pramod Sharma, a very long-term investor who wants to invest for the next 10 years, he says. And he says, looking into India's growth story, he purchased the following stocks in his portfolio. He's not sure what to do with them now. The first on his list is Adani Ports, which he bought at 130 rupees. What's your call on Adani Ports?
He's got invested at higher level. Any pullback, try and come out. If you're looking at 5-year, 10-year kind of horizon, then I think power generation is the sector to be in. And over there, as a disclosure, we do have buy coverage on Tata Power and NTPC. And remember, power generation, of course, recently we've seen government policies ease off a little bit for the power generating companies. And that has opened up a blue sky for some of these companies, and that's why we picked up Tata Power and NTPC.
Our investor has Axis Bank at 12.50, which he bought. It's currently at 9.67. Would you recommend he hold on to it? Obviously, it's a stock that you think is going to go places.
Yes, definitely hold on to it. And if somebody's got in at higher level, I think the stock was trading below 1,000 or close to about 1,000 rupees. And if you have a opportunity where you're getting a stock, if you invested at higher level, you're getting it again at about 5 or 10% dip, one can definitely average it.
Yes Bank on his list now. He bought it at 290 rupees. It's actually trading at 321 at this point. Another bank you think that has potential?
The kind of performance that the bank is giving over the last 3 or 4 quarters has been quite consistent and par excellence. So stay invested. You get an opportunity close to about 320, 300 levels. Definitely get more into it, get more into your portfolio. If somebody wants to invest afresh, I would definitely recommend that he or she should do it.
His next stock is Dabur, which he bought at 110 rupees. Continue investing in this one?
Well, not really. I think Dabur has done well, has been holding out, but in terms of longest time horizon, the problem with this particular company is that they have not been able to roll out many products. And I guess I was given to understand that they were also going to roll out retail outlets, which there has been some kind of an issue and has got delayed. My opinion over here is that if you want to exit Dabur, get into ITC and HUL, I think definitely that is more recommended. I would recommend ITC or HUL more than Dabur. So here I would advise a switch again.
Sun TV at 310 rupees. That's down to about 225 this week. What's your call on Sun TV?
I think from here on, the downside looks limited. The growth, the ad revenue should go up. One of the largest dominant players down south. Hold on to it. If you got it at a higher level, average it out. And I don't think it will be difficult to reach this kind of target of about 325 to 345 with 12 to 16 months time horizon.
The last stock he has is Tata Motors. We've seen a lot of good news come in for the company from overseas, but domestically, There's all of that bad news, high interest rates, high petrol prices, and of course the fact that the economy is slowing down. What's your call on Tata Motors?
Well, everything is priced into the current market price close to about 220, 230. Hold on to it. We see recovery happening in the next couple of quarters. And that's where we feel the targets of about 330 to 360 could be achievable. There might be a little bit of pain. There might be a little bit of stretched out time horizon given the kind of steep correction that we've seen in the stock. But I don't think one should get disappointed by that. The fundamentals are very strong.
So Pramod, we hope that helps. Get back in touch with us if you need anything else. We slip into a quick break. On the other side, Gaurang will give us his first stock pick, Godrej Consumer Products. Stay tuned.